there aren't a ton of sexy deals on market. And a lot of investors and business owners, they are pretty quiet over the holiday season and into January.
Hey, Adam JD Martin here. Welcome back to the channel, Zach.
We are ready to rock and roll, baby. We're talking 2026 data, 424 million in institutional buildings. That is like that's over four times what they did in 2023. Big institutions are building now because everything else is slow. Values have gone down, rents have come down a little bit. Home ownership rates are starting to decline because the barriers to enter home ownership are only increasing. Since Adam offered or mentioned it, I will chef kiss it. Mwah. The value add for newer buyers is good. You can get nice houses. We had a huge bomb dropped on us for Waterloo Region about water supply concerns. The region of Waterloo has come out and said, if we continue to grow and we do not continue to develop our infrastructure differently, we are going to have concerns over water supply.
I always go back to the fundamentals in this situation, which is welcome back to the Canadian Real Estate Channel. I'm Adam JD Martin, your host, and today I've got Zach from Zack Brittain Real Estate, and we are distilling the data. What happened from now in 2026? What happened last year? What happened 2024 and 23? Zach has an incredible presentation for us today where we're demystifying some of what you may have been hearing on the news, and we also have some updates coming from KWC about water issues. So I'm really excited to have Zach back on the channel. It's been a little while. Zach, welcome back.
We are ready to rock and roll, baby. Absolutely. We're talking hype songs. We're talking 2026 data. I have been super quiet on social media over the holidays and into January. It's been some incredible family time, some life balance. And the investor hot list has been quiet too, because frankly, there aren't a ton of sexy deals on market. And a lot of investors and business owners, they are pretty quiet over the holiday season and into January, cleaning up some family trips, taking care of some annual business tax and business planning. Seasonality with real estate is real, but we had a huge bomb dropped on us for Waterloo Region about water supply concerns. We're going to take care of that right off the bat. And I did a ton of research, not just for the last video, but leading into 2026 for a bunch of our investors on just critical data, immigration, population, education, income, did research on building permits, what's coming to market. So hopefully you investors or you homeowners and even you individuals considering moving and living or just investing in Waterloo Region, I want this to be like a good 20, 30-minute snapshot of the basics that you should really know. And then you can kind of whittle down your decisions from there. As well, Adam, if those of you are still into in-person events and meetings, we have ADU open house. We have site tour options for 6-plex and our 10-plex builds, depending on the time of year. I'll post the numbers and the dates for those at the end of the video if you guys want those, or just email me direct if you're interested in seeing a detached ADU project for yourself or a 6-plex construction project for yourself, or come visit the site where we're going to be building a 10-plex later this year. A lot of people, especially in real estate, they like it because you can see it, you can touch it, and getting to meet people in person on those site tours, super powerful. And honestly, like one of the biggest turning points for us when we started to get more into these infill projects was we did a bunch of site tours for a bunch of other guys that were doing these projects. And you just start seeing how they think, seeing how things work, get little nuggets of like why they do specific things, specific ways. That is like the huge learning curve for at least for us. And I know other investors feel the same way about just seeing them for themselves. So just a quick thank you. In the last video, I mentioned we do donuts for dollars every year. We auction off donuts at the end of the year. I eat 100 a year. The last 10, I kind of put them up for our clients and our friends on our social media, and they'll toss us some cash for the food bank. So we did just under a G this year, a little bit lighter than some other years, but frankly, it was a little cold, and I don't think people wanted to come out and see Uncle Zach and get some donuts from the freezing rain or the foot of snow we had. But almost a G for the food bank. I appreciate you guys supporting. If you guys want to get some donuts with me, if you want to take me to a donut spot, if you just want to give some money to the food bank, hook me up at the end of this year. We're going to be doing it again in 2026. So just a quick shout out. And then last of the shout outs for now, investor hot list. If you guys aren't already on the investor hot list, Adam, great starting point. Listen, if you are an investor out there and you're like, Zach, I am qualified, I have capital, I know exactly what I'm looking for, but I'm not finding the deals I need, that's a quick phone call. Hop on a quick phone call with us. Tell us your exact criteria. As long as the criteria is realistic, I don't think there's any way we can't find something suitable within a couple months between our network of on and off market deals. Investor hotness is there are deals there, but they're a great starting point for people looking to learn the market. A lot of the deals are on market, some of them are off market. Lots of data, just like what I'm going to share with you guys in today's video. Go over our website, follow the link in the description of this YouTube video. All the details are there. Oh, I had to keep the Flaming Elmo meme on.
No.
This is the Waterloo region right now, not the real estate market, just the region of Waterloo offices right now and all the city offices. They are screaming in flames. They have some concerns. Okay.
Okay.
This will be a clip right here. Region of Waterloo supply concern. The region of Waterloo has come out and said, if we continue to grow and we do not continue to develop our infrastructure differently, we are going to have concerns over water supply. Now, personal opinion, I don't know anything about the water supply. I'm not a water engineer. That is not my lane. I don't know anything about the data, but I do know that coming out and saying, hey, we think we have a problem and not saying anything else may not be a way to properly communicate or handle a problem. And that's basically what the region of Waterloo did 2 weeks ago. About mid-end of January, guys, Waterloo Region came out with a webinar and was like, hey, we have concerns over water supply, so we're not doing any more building permits, or sorry, development permits. And that's all they said. I mean, and it took them 45 minutes to kind of spit that out too, which really pissed me off. Like, get to the point and then start asking questions. And, long story short, we've been communicating with the region, we've been communicating with the cities, and there is a lot of differing opinions and not a lot of answers. What the city of Kitchener has explicitly told us is that permits that require water service upgrades are not a hard no, they're a case-by-case basis. And what they're basically saying is, we don't know what's going on either. I think it was a premature move by the region to say, hey, we know there's a concern, but we have no answers. If we know there's a concern, maybe we come up with a little bit more of a strategic plan so that builders and developers and residents know what the hell's going on, instead of just freaking everybody out being like, we're running out of water. The reality is,
Yeah.
the numbers that they were sharing with us is there is a concern over a potential shortage, not a definitive, oh my God, we're going to have a drought if we continue to grow and we don't do anything. So what we are doing is we are prying with the city, the head of development, the head of building permit, everybody we can get an ear on to get more clarity. They're all saying very similar things. We do not have clarity on this. This is at the region level. The region is going to consult with the city. The city will consult with permits, and away we go. So if anybody has information on this that I don't, holler at your boy. If you have no idea what's going on and you want to know what's going on, stay in touch. We will be putting updates on this. We are watching this for our own projects and for clients' projects as well. A very solvable problem because the time horizon they were dealing with, but a little bit of a oopsie scare by the region.
Yeah.
Oops. Now, critical data. For people watching the video, I will give you one guess what you think the top number is. 71.4% in 2011 to 64.6% in 2021. In 10 years, this is an extremely critical point of data to understand what the trends are in Waterloo Region. That is the percentage of home ownership in 2021 versus 2011. In 2011,
Interesting.
71.4% of people owned their own home. In 2022, 10 years later, we're down 6%-ish. Okay, 64.6%. Now, the reason I bring that up is we have talked on this channel, other major cities in Ontario and all over Canada, whether they've been on this channel or not, are mentioning very similar things. Home ownership rates are starting to decline because the barriers to enter home ownership are only increasing. Why this is important as a real estate investor, Adam, that means that a larger portion of people will be renters in my market and in other markets that I plan to either invest or help clients purchase and sell in. So if that is the case, then the trends of what people will want in terms of purchasing and selling, whether it's to live in themselves or to own as an asset, as an investment, and what people will want to rent will change along with this. Because traditionally, you could afford on a single income to go buy a 2 or 3 bedroom detached house with a yard and a garage, and you have enough room for 1, 2, 3 kids if you want to make it happen, and you could have traditionally what people were going to do as a normal life. Now that with how expensive things have gotten, how quickly they've gotten that expensive, options are going to be more and more limited. And so we're really tracking this number quite closely. And a lot of those numbers are affected by these trickle down numbers for your population, immigration, education, and incomes. Population in Waterloo Region, their growth slowed to less than 1% in 24. That's expected in 25 as well. No, this is a very big point of controversy for a lot of people that are just data nerds, but also people in real estate is student data or student population is included in our population.
Right.
So about 60 to 70,000 full-time students that are residing in Waterloo Region every year. Call it 10%. That's just students. And like, I don't know about you, but like when I went to college, it was 50-50 where you ended up after. You're like, yeah, you try and find a job either in your hometown or the city that you're going to college in, or you're going to a bigger city just because there's more jobs. Waterloo Region is retaining more and more of these students, but that is really important to note. Immigration.
Yeah.
This one's interesting too. 25% of our region is an immigrant. Whether
That's
they're,
crazy. That's a
regardless of their
crazy stat.
status, whether they're PR, citizen, whatever, they're an immigrant. It's crazy. 1 in 4. Now, what's even crazier is 70% of the permanent residence permits that are being given out to people that are staying in Waterloo Region. So they immigrate here. Once they get a PR status, they're staying here. That's economic or family. So they either are proving economic benefit, which means they have a job or a business, or they're bringing capital over to start a business, right? Or to buy assets, or they're direct relative of a family member who would have to prove economic status, right? So there's a really negative narrative to immigration, how it's inflated populations, inflated rental rates and asset costs and whatever. But the reality is the majority of immigrants that are coming specifically to our region, and I'd assume this would be mirrored for most regions aside from the GTA, just because of how big it is the majority of these people are, either working, have cash, own businesses, or have blood relatives that are already PR or citizens here. Now, another thing that's really interesting is education. 61% of locals here in Waterloo Region have above a high school education. 65% of immigrants that are here have above a high school education. So we're
Interesting.
bringing in people that are more educated than we are. Now, there could be arguments to their level of education and quality, but statistically speaking, kind of an interesting point. One thing that was even more interesting than that was the median household income. Now, this is only taken from census data. Next census is this May, I believe. I might want to double check. I'm almost positive it's this May. 2021 census revealed that median household income in Waterloo Region was 92,000. Now, I expect that to take a relatively significant jump up because there is a decrease in students this year living in our area, and the majority of the PRs and new immigrants, which make up the majority of our population growth, have economic or family status here. So they likely will not be dragging those numbers down. And quite frankly, a lot of high paying jobs have come in and stayed in Waterloo Region. Now, these things are all important for me as an investor, Adam, and you boys and girls watching out there is if I'm going to start investing or continue to invest in an area, I need to know that that area will continue to be able to comfortably afford to pay strong enough rents to support my asset.
Yeah.
To put it plainly, right? There's money to be made in any market, but for me, I'm a simple boy. I want to buy something at a good price today. That's not a complete dump. I want to keep it pretty nice, and I want to rent it out to people that are going to pay me on time and pay me decent rent. I don't need the garbage rents for the cheapest price. I don't need the
Yep.
best rents for a crazy sexy price. I need somewhere in the upper middle of that. So I get good, decent tenants that aren't strapped for cash, that can comfortably afford it, and they're not going to move out every other year.
100%.
Perfect. Right? So this is critical for anybody that doesn't know anything about our market or anybody that knows the area but doesn't know a little bit more of the economics and data behind what's happening and why. This is for the real investing nerds, though. I got 2 graphs after this. God dang, a good graph. What it can
I
do
love a
for a
graph.
data nerd like me. 2022, we built 1,000 single-family homes. 1,022. In 2025, estimated we're only going to be doing 500.
Wow.
Oops. Now, there's lots of reasons for that. Now, in 2022, we built 3,800 multis. We're projected to build less than that this year, or last year, sorry, in 2025. That's interesting because builders shifted from building single family homes to building multis because their job is to build and sell shit. Nobody's buying stuff other than investors that are buying purpose-built multifamily assets. So they shifted to building those, and they're not even building as much as they did 3-4 years ago. Okay. Vacancy rate. Woofka, more than doubled in a 3-year span. Primarily because a lot of international students are no longer coming. And that inflated a lot of the data because international students needed a place to live. There wasn't enough places to live. Rents went up. Now there's fewer international students, primarily from Conestoga College. So there's a lot less pressure on that. Vacancy rate should be around 2-3% in our market anyway. Below 2 is tight. Above 2, okay, maybe have some options, right? But we're projected to be just under 4% in 2025. Now, for rental numbers, 2-bedroom rent was $1,469 in 2022. By 25, we're just under 1,900. That's about a 5% bump per year in the
That's
last 4 or
crazy.
5 years. Like, that's not tiny. That's almost
That's
double
crazy.
average inflation.
Yeah.
And that's considering the drop in rental rates that we experienced from kind of 23 to 25. That's after a pretty steep drop.
Yep.
So our so what segment last video, a big part of it was like affordability short term and long term. We're going to revisit that, but like affordability short term is getting slightly better. The long term, like, is not affordable. These are one of the two graphs too. Look at this top line, dark line. That's the number of apartments, the percentage of total buildings that are apartments units. The gray lines underneath are single detached homes, semi-detached homes, and townhomes. What's important to note is in 2015, apartments accounted for 50% of buildings, total units built, right? Well, 2024, we're about 74%. So for every 100 units being brought to market, 74% of them are rentals. Like,
Wow.
guys, this is all they're building right now. This is all
Yeah.
they're building right now. What is even more interesting for you homeowners out there that are like, Zach, I want to be able to buy my first home, or I want to upsize, or, I want to get the dream home. The two gray lines in the middle, the one that is slightly higher in 2024 is townhouses.
Yeah.
That includes stacked townhouses. They are not really building traditional 2-story row houses with a little backyard, a single car garage, and a finished basement. You could comfortably live in and raise a family and no problem. They're a little bit more affordable than detached homes. They're in good neighborhoods, close to schools, because they're brand new. They're building stacked townhouse complexes. That's
Yeah.
1 and 2 beds with 1 car parking, no room for the work from home office, no garage, no storage. Everything's getting a little bit tighter.
Yeah.
Okay. So a lot of our first time home buyers that are moving on from townhouses and, your condos or your smaller detached and your semis, the battle to get into a nice detached without spending $1 million, that's going to continue to get pretty tough, right?
Yeah.
Now, next one, a little bit more complicated. You guys can pause the screen here and kind of look at this data. This is a report that's released by the Region of Waterloo on building permits issued. Tons of data on this. ChatGPT the report and then summarize the report. If you guys want to be lazy or you want to be efficient with your time, do that. But this graph is super powerful because it shows the value of building permits from 23 to 24 and then the change. And it also goes over the difference between residential and non-residential. Residential makes up the bulk of building permits in Waterloo Region by a mile, like more than double typically what non-residential would be. Now, at the top, 2024, the green underline, it underscores 424 million in 424 million in institutional buildings. That is like that's over 4 times what they did in 2023. Big institutions are building now because everything else is slow. Concrete crews, electricians, steel crews, HVAC companies. Nobody's building houses. They're available. Big institutions are building office buildings, expanding campuses, right? Commercial and industrial is, continuing to go pretty steady, but it's the big institutions that are adding to the portfolio right now. Also, your apartments, right? Don't get me wrong, there are way fewer. You're like 30 to 40% fewer buildings, period, in Waterloo Region in the residential sector, right? The bottom section there where it says residential highlighted in green, 1.5 billion value in residential permits in 23.
That's
That's
crazy.
down. Dude, that's down 500,000, 600 or 600 million, 500 million, 600 million. 600
Yeah.
million drop in 24. Do we think that trend's going to continue in 25? Probably. Do I think we're going to lose another 500 million in building? No, but like there's no way we're going to build 1.5 billion in 23 or sorry in 25 or 26. It's just not going to happen. So the summary here, guys, is institutional, they're still building. They're actually building way more proportionally. Residential, they're building 30 to 40% less depending on the segment. The only segment that's still consistently building is people are shifting from single family detached, semi-detached townhouses, and they're building apartments or townhouse complexes, stacked townhouse complexes. That's the summary. But overall, just imagine 30 to 40% less value in construction permits, being issued, period, in Waterloo Region in 1 year. If that trend continues to be aggressive in 25 and 26, there could be problems. They're straight up, there could be problems. The construction industry could really feel some pain for a couple of years, right? Now, that's the building permits. Here's some questions that, investors should be asking themselves. Will population growth outpace building? Okay. We're seeing building slow. Are we seeing population growth slow? Yeah, for now. But is it proportional? Okay. Once we get some 25 numbers on that, Zach will report back. But then also, will income growth keep up with inflation, with the cost to build these apartments, with the cost to build, infrastructure, with other housing costs like energy, insurance, property tax, whatever, maintenance, whatever, right? Those are the real questions. And those are why real estate investors, especially those that are in it for the long haul, they already thought about these questions and they've already determined, you know, building probably won't be able to keep up with population growth if Canada continues to bring in high levels of immigration, which regardless of what you hear in the news, they are. Check the data. It's fucking crazy. Pardon my language. Next, income growth. Will it keep up with inflation? Cost of living. Probably not. Probably not, right? So, housing costs are expensive, and income growth typically isn't keeping up with it. Historically, it has not. So, I think those are really important questions. If you haven't asked them, that may kind of be one of the lines of thinking that can really get you focused on, hey, maybe real estate investing could be an option, whether you're already involved in it or whether you're considering it. It helps support the logic behind it for simple guys like me, anyway. And now, Adam, numbers for context, baby. Uh, you're familiar with Waterloo Region. You've kicked around
Yep.
some deals. You got your finger on the pulse. You're talking to other investors like me and the other guys and girls on the channel in similar markets in different locations. But just to kind of give you people out there context on where you fit into the market or how big or small parts of our market really are, there's 205 listings valued 400K or under just on the market right now. Over 60 of them don't even have a parking space. And their average price per square foot is 505. That's just what's available on the market around 400K and under. Okay.
Man,
All right. Now, last 6 months on market, only 83 multi units sold. Now, it's just on market. It's not a ton.
that's
Okay.
not a
No,
lot.
not a lot. We have almost 700,000 people here. You're telling me only 83 people bought a. That includes duplexes, by the way, which most are just owner occupier or, smaller mom and pop investors, which is fine, but it's not a lot. 50 freehold detached sold for 500K or less all of last year. So listen, values have gone down, rents have come down a little bit. We're building less, significantly less. There's way less permits being issued too. But it's not like we are all of a sudden back to this world of blissful affordability, right? It is still not super cheap, right? And another just little part here was I was like, okay, well, what if somebody just wanted a freehold detached 3-bed 2-bath? How many of those are kind of flying around? There was all 1,457 sales that matched that criteria. Any price point, the whole region. So of, let's call it almost 700,000 people, let's call it 350,000 properties, only 1,400 of them, 1,450 of them actually sold last year with 3 beds and 2 baths. On average, they sell around what they're asking for, 100% spicy ratio. Listed for 600K, sells for 600K on average. And they're on average 1,700 square feet, sell for $510 a square foot. So just for context on like how many things are moving at different price points and what they actually are, I thought this was really interesting just to kind of like give people didn't know that look at Waterloo Region. And I'll get some of your opinions on this, Adam, real quick. Affordability will not improve short term. I corrected this. I put a bunch of stars there because I actually think affordability right now is probably pretty close to as affordable as it's going to get for the short term and for the long term. Next year or two, probably shouldn't see a ton of change in prices or rental rates. Not as aggressive as the last 2 years, but there might be a little bit of room both ways still. So a renter could save a couple $100 a month for a comparable property, or they could upgrade to a better neighborhood or a better quality property for the same price ish, right? For owners, buyers, and sellers, if you're buying and selling in the same market, kind of potato potato. But what we are seeing is we are likely short term going to overbuild on rentals because that's only thing that developers and builders can make money doing right now, or even just get out from underneath projects, right? They're not selling $1 million detached homes, mansions. They're
Yeah.
not. They're not selling those. And those are the only freehold detached properties that make sense to build because the land and build costs are so expensive. So in a market where, Adam, I'll ask you this, in a market where rental market is softening, resale market has softened aggressively, it may still soften a little bit too. Like, are there specific types of deals or are there specific scenarios or clients that can take advantage? Listen, if anybody's got a bag of money and they're buying real estate every year for 20, 30 years, whatever. You're probably buying a little bit more this year than you did last year and the year before because prices are just
Yep.
cheaper. But the average mom and pop that's either starting their portfolio or somebody that's upsizing, are there any trends that you're seeing or that like you think would hit home or really be able to execute in a market that has a little bit more inventory and people are kind of fucking scared?
Yeah, I mean, I always go back to the fundamentals in this situation, which is you have to be out there making offers on things that make sense for you. And I always focus on the fact that like it truly is your offer to make in that type of a market. So think about the price and terms that work for your strategy. And of course, you would be looking for situations where you could get turnover, where you can add strategic value, and be offering on properties that are either sitting in the under those conditions, or as they're coming right up to market. Sometimes just tossing offers on them can really encourage the seller to take action because if they're expecting, you have to remember that some people in this type of market still need to sell. Like need to sell. They're not just listing, they're not just fishing, they absolutely need to sell. And so making them an offer that makes sense where you can actually say, hey, like here's what I'm trying to do. I'm offering you this price because of these considerations. And if you are not interested, that's totally fair. But I'll still be here, right? Especially if it's going to be sitting for 60, 90, 120 days in a market condition like that. So I'm making offers in that type of market that work for me, and I'm looking for strategic value where I can find it. Right? Like I would still
Strategic
because
value, like bring back the value add. Like the
well,
amount of people that are
and
passing on
what you
stuff like that's
mentioned
crazy.
there, what you mentioned a few slides ago was the vacancy rate is up, right? It's doubled, but it's still not a scary vacancy rate, in my opinion, at all, because it's under 4%. And really, you have to think that the ones that are vacant are either wildly overpriced or they're under delivering, right? And so we can always find ourselves in the pocket of delivering value because at the end of the day, this is a service we're providing. And I would say it's a product and a service. And you need to provide things that make sense for people, right? So people want to see the kitchen, the bathroom, the landscaping, lighting, paint, all that stuff, flooring done for them. They want dishwashers, they want laundry, they want those value add things
Yep.
as a renter, and those are the things that help them justify top market rents. And so I don't think you need to be afraid of vacancy, especially if you're making offers on properties where you can add those strategic elements.
And the value add isn't gone. It's just you're not gonna go spend 50K and make 150K off of it.
Yeah, yeah,
The
which you
market's not
shouldn't
appreciating right
anyways.
now. But I mean,
That's
bring
fine.
back the glory days, but that's not healthy for a market long term. And this
Yeah,
is what reciprocates when you have an aggressive market like that. And I think slowly, not to make it too vague or conceptual, but slowly the market is finding where it should land. And
yeah,
it's gonna take at least a few more months. I think a lot of people are tentative for the spring. A lot of veteran and real estate investors aren't expecting a massive rebound in the spring. But a lot of I'm a real estate agent. I sell real estate, but a lot of sales guys who that's kind of all they do. They're really preaching, "Hey, spring market's really going to rebound." You know what? I hope it does. I think that'd be great for a lot of people, but I also would be cautiously optimistic over those types of statements right now. I would
Yeah.
be letting the offer fly, and I would be using the key components of the offer: condition, price, closing, flexibility on things like deposit structure, timelines, inclusions, exclusions. Think of those as different levers to pull based
Yep.
on what you get back from
Yep.
the seller or their representative when you're negotiating these offers. And don't expect every offer to land. If you're looking for like the best possible deal, there are so many different ways to get there. And by, putting all your chips into one offer that you think is a perfect fit for the perfect scenario, the perfect seller, your chances of success are slim. You really got to be, making more than one offer. But for my
Yeah.
sake, if I'm, repping the offer, I pray to God the first offer gets accepted. Hell yeah, baby.
But
That
you
being
can also
said,
sell good inventory in this type of a market too, like,
yeah,
and by the same mechanisms. Like I just sold a building where, there's room for improvement on it. There's a lot of room to improve the value on it. And all I did was I offered a second position vendor take back. The buyer's going to take that. They're going to use those funds to most likely renovate the building and improve its value and get some high quality tenants in there. And it works out. So I think from the seller's perspective, you have to at least be open to the concept that either you need to provide a high quality asset that you're selling if you want top price, or provide terms that could allow somebody to turn it into a high quality asset.
yeah. And you know what? What's interesting though is a lot of lesser experienced investors and lesser experienced agent reps aren't as familiar with what you can and can't be flexible and how to position
Sure.
those conversations. They're just like, nah, just sell it at a cheaper price. It's like, well, there's a lots of
Right.
things that you can do to promote a better sale price, but it may take a little bit more work or it may take a little bit more time. But if you're saying, hey, Zach, hey, Adam, I need max price for this. Okay, well, you either need to improve the asset to get max price, or you need to improve the terms that you're willing to work with
Yep.
to get close enough to that max price. Because otherwise,
Yep.
a buyer or an investor is not going to see value in it. And we've seen a lot of that, a lot of expired listings, a lot of listings sitting, not selling, a lot of people just taking properties off market, just canceling listings because they're so far away from realistic. For example, I can't share specific listings even in my own stuff on these videos, but the amount of triplexes and fourplexes I see that are like 300 to 350K a door,
Yeah.
typically grossing 1,400 a month per unit in rent. I'm just like,
That
guys,
doesn't
what are we
work.
doing?
Yeah.
I just don't get it. I just don't get it. So some actual scenarios real quick. Upsizers. I had an offer scenario where a client's offering on a property that was priced just over a million, probably worth between asking and 1.1, like confidently. There was 8 offers on this property, guys. 8 off. It was on the market for literally a week in early January, and they were getting multiples above a million, right? Now, what we are seeing for people that are making upsizes is, do I make a purchase with the condition of sale of my current house that's smaller or older, whatever, or do I sell that first and then let the offers fly to go make a purchase? Now, a lot of people making an upsize typically have families, right? That's why they're upsizing. They need the more space. And so it's really tricky for people to sell a property without having a new home to move into when they got kids in school and all that jazz. So I understand it. But where I'm seeing people get like nice terms and price is making the upsize without SBPs in them. No condition of sale buyer's property. Because if I'm accepting an offer as a seller and it's conditional on the buyer selling their property, I got a month, maybe 2 before they firm up. And that market can change a lot in a
Yeah.
month or 2. It can really cool off for your listing. There's lots of things that are out of your control. So there are ways to mitigate the risk of working with SBP offers. And we discuss all those scenarios with our clients, but we're seeing a ton of that for the upsizers. The downsizers, we're seeing like people who are like, F it, I've made a ton of money on my house. Let's just sell it and go move into this nice condo so I can go hit the cruise or go spend time with the grandkids, whatever. And then we see the
Yep.
people that are like, we want to be 200 grand over what we think it's going to sell for, and we'll slowly work our way down. And those ones typically aren't selling. Just, I'm making broad generalizations here, but like we're seeing a lot of that. For our first time home buyers, since Adam offered or mentioned it, I will chef kiss it. Mwah. The value add for newer buyers is good. You can get nice houses that are dated in nice neighborhoods that you will look back 5 years from now and be like, oh, baby, we got a little
Yeah.
bit more of a wooded lot, or we got a mature neighborhood, or we got a quieter side street, we got a little bit more frontage, we got a detached garage, whatever it might be. Yes, don't get me wrong. Things are still expensive, but The value adds are very attractive right now because the amount of buyers that I've had go through my listings that I'm selling when I'm selling a single family detached home, that'll, if it's not in brand new condition, they're like, oh, well, we wanted better condition, or we wanted an ensuite if it didn't have an ensuite. They wanted the modern finishes, which is fine, but you need to be up in price point for those types of properties. You need to be into the eights if you want, kind of bigger than 1,500 square feet, good condition, garage, ensuite, finished basement, like whole house package. And a lot of newer buyers, especially first timers, aren't spending 7, 8, 900K, right? And then condo deals with a Z, just because I'm Zach, and I actually did pretty well for our clients that were selling and buying condos last year. A lot of downsizers and a lot of first time home buyers finally poking their heads out, being like, I don't know if I really wanted a condo, but like there's some pretty great deals out there
Yeah,
right
but they're
now.
cheap.
Maybe,
Yeah.
yeah. And when I say that, I mean like I would be really targeting 1 plus dens or 2 bedrooms in buildings that
Yeah.
aren't super old in A plus locations,
Yeah.
because even if you don't need the space, if you can afford it, that's your work from home office. That's a spare room for the guests or for the kids or the grandkids or your grandparents whenever they come visit. And that's extra value to turn around and sell when they aren't building nice size 1 plus dens or 2 beds anymore. They're just building
Yeah.
small ones and bachelors. So, um, there's still competition for good freehold properties, 800K and under. And then our investors, Adam, sixplex, the market for sixplexes and under has just been decimated. Um, Duplexes are primarily owner occupied, or those investors kind of picking up their first, maybe their second property you can get a good deal on. There's about 5 or 6 like nice duplexes deals a month that we're seeing, like just nice prices, either vacant possession or already tenanted, getting good rents in a good location. So like not a bad time to start sniffing around those types of deals. But where we're seeing is the 8 plus purpose builds are in high demand.
Yep.
The demand for A plus assets that are kind of above that 8 or 10 unit minimum, those deals are still very attractive. A lot of investors are still snooping around for those. So there's still some big demand for that. We're gonna just fly through this real quick, Adam. I'll leave this up for anybody that wants to take a screenshot or anybody that wants to pause it. We just recorded a video about a month ago and it just posted probably about a week or two before this one comes out, Adam. Me and Matt kind of just take you through the high level of our 10plex infill project. This is in downtown Kitchener, right by an LRT stop. There's the numbers. We purchased the land. We are hoping to start breaking ground as soon as the snow's gone, but working through some complications with the city. Typical infill, typical development shit. Everything takes a little bit longer than you expect, but we're super excited about this project. We will offer site tours once it's smashed down. These are the numbers. If you want to see a little bit more commentary on the numbers, go to the video about the 10plex that we just posted on the Canadian Real Estate channel. But for the sake of time on this video, we're just going to kind of glaze over this. I did want to put it up, but we're running a little short here, so we'll go on to kind of the last couple spots here. Um, Site tours. If you are thinking about building an ADU, detached, attached, you want to finish your basement into a duplex, you need to add another unit for grandma and grandpa to live in, or your parents or grandparents' house has space and you want to figure out if you could put a unit in the backyard for either rental income or another family member. Those are really common scenarios. The biggest comment we get is the comments and questions around like what it actually looks like, because there's an image for ADUs or tiny homes that it's literally like a big garden shed, or that it's on wheels even. Like that is not what these are really like. And so seeing them for yourself can be really powerful. We have an amazing client that's going to let us host an open house at their ADU before they have occupancy, the tenants moving in. That's going to be February 21st and 22nd in Guelph. So even those of you that are coming from the GTA, it'll be a little bit closer for you. I will send out the information on my social media, on Fifth Sprint Real Estate, and on our investor hot list. If I can promote it on here, I will. So those of you that watch the video see it. But that'll be 2 to 4 p.m. on those days. Save them in your calendar and send me an email if you want the date or you want the exact location and any other info in advance. But myself and maybe one of the construction guys will be there. We could talk to you about construction costs, permitting timelines, designing, what we've found has worked, because I think we've built over 20 of these now. Um,
Dang.
so like we're fairly experienced with kind of this quality and style of product. And then we have a sixplex on the go right now. Matt's building a sixplex here in Kitchener, semi-triplexes, purpose-built rental, CMHC. There's a lot to unpack with that. But like I said earlier in the video, the site tours are super powerful. Any investor that wants to build, whether you want to build your own house, you want to build an ADU, you want to build purpose-built rentals for yourself, We're a pretty open book. We love collaborating, and if we can share info that helps somebody, even better. A lot of people that we partnered with deals we've gone through with site tours and we've met on site and we've gone through designs and stuff with. And I find it kind of helps just take concept in your brain to like, hey, this is actually how it's built. This is why you do things a specific way. Here's where the cash is actually going to. Here's what's expensive. Here's where we can save money. The real life examples. So if you want a site tour for the sixplex, Adam, I'll just ask you guys to send me a private message, either DM me or email me directly so we can hop on a call and coordinate. A lot of it will determine on your schedule and the project schedule. We can't be interrupting the guys while they're working there that much, but we're happy to show off the project, and we'll do a final tour once it's all said and done. But if you want to see it in the flesh, there'll be fairly limited availability. So get in touch now. You can book a call. You could set up a message or set up a meeting or a site tour, just emailing me there. I wanted to come on in this video and just give people a snapshot of the data. I wanted people to know that the market is softer in the winter. And regardless of any hype you're seeing online, whether it's on social media or from other people, I don't think anybody knows which way the spring market's going to go. I think there's a lot of uncertainty and there's a lot of people waiting on the sidelines. And there's also a lot of Canadians that are still feeling the financial pinch. So until we get certainty that Canada is going to come back and there's going to be jobs and people are going to start making money consistently again, I would be cautiously optimistic about real estate in the short term. To cap it off, though, real estate is a long-term game, Adam. So if you're in it for the long term,
Yeah.
there are deals to be had. There are deals to be made. There's money to be made in this type of market. So if people have questions about how to do that in Waterloo Region, myself and Matt Phipps are ready to rock and roll, baby.
Well, Zach, thank you so much for coming back on the Canadian Real Estate Channel today. That was a ton of data, a ton of really great information for the folks at home. And we actually would really love if you would keep us updated on the water situation. That was
Yeah, that's
interesting
big.
and certainly not on my radar. So I think that would be a fantastic little piece for us to touch in on next month. So we'll see you right back here next month, Zach. Appreciate all of your insight and all of your knowledge. And thanks again for being a great partner of the channel.
See you guys soon. Thank you.